I'll go ahead and pull up my, you guys hear me? Got a new mic. Someone started shit talking. Forgot everyone's muted in here. You guys don't have to mute as of right now. But as I wait on all that, can you hear me? Good. Should sound better than my headset mic that I refused to buy an actual mic. But since someone decided to spew some shit in my comments, I went and bought a new one. Let me go ahead and grab my notebook out because I'm sure you guys will like this. Oh, I need to turn on noise canceling. You guys are probably going to be like, oh, I keep hearing you click. Not you guys. I'm recording this because people are missing it. Actually, that should be fine. Hello, Nate. Welcome back. I'm still waiting on people, by the way, Nate. So okay. That's why I haven't fully yet started it. But since I didn't upload a video today, I was just gonna talk about what I did today. What I use. Okay, there's one. I'll go over that. I was gonna go over that anyways. My favorite is ICT though already. Just looking at traded CSD like gold. I know you said whatever the concept is, master it. So what should be the model for beginner trading for like 1.5 years? The simplest one you can find. So I would tell you to do internal to external range liquidity, which is internal is the most simplest way to put it is fair value gaps, and external is the most there. I'll share my screen. I got to share it anyways. What I would tell you to do is, this is what I tell all of my friends that are starting out, is external range would be this high on a 1 hour. It's fractal or like everything we use. External would be this high. Internal would be this right here. So when you're framing your narrative or your bias, this is also a bias tool for everyone that wants to use it. This, let me grab my thing here. This is a fair value gap. I think everyone knows that. And this is internal range liquidity when we go to this fair value gap. And there's other stuff you can add to it. Like I have a daily order block on here to help me with another level, but I'm already expecting a rejection in this, or expecting it to respect this fair value gap. And external would be this high. Also, it's an all-time high anyways, so it's daily external. This is internal liquidity. It's like, think about it like a consolidation. This is internal, this is internal. So if we're just moving internal to internal, we're not taking any major highs. So like, let's look at this as an example. If we did not move, let me turn all this off. So if this was our external high and our external low, we are not that one, this right here, this and that. Let me replay this. This would be a consolidation with that. So external would be this, external would be that. And then our internal would be this fair value gap, but you want to pick a fair value gap that's in a discount, obviously. Don't long in a premium, don't short in a discount. So, or I have that totally ass backwards. Don't long in a premium or not long in a premium. Yeah, that's right. Sorry, I actually did have that right. Said that wrong. But this would be your external low. This would be your external high. This would be an internal with internal liquidity, which is right here. And when a good tool I use already, I use this anyways, is internal to external. That's how markets really move. Like if you want to get really like into it, it's always going to internal to external. The hardest people that have with it is which one to use. And I would auction you to use like discount and this. If there's lows resting in it, it's even better because that's taking every bit of internal on sell side. So that's why we go straight up. And on NQ, it actually went up. We SMT'd this. So now let me go back to today because I was going to go over today's trade as well. But today, I'm just going to get into this and make sure I'm recording. First of all, we are. Okay. So today's trade, wherever we're at, let me turn on my things. All right. So going into today, I'll turn 2 to 5 a.m. because that's where you want to see the low form if we're bullish. Anyways, it's 2 to 5 a.m. of the day. You don't want to see it anywhere else besides 2 to 5 a.m. It's called a Judas swing. That's time, aligning time and price, which is what I love to do. And we have, if I zoom out, I believe it's a 4-hour order block. So this would be our change in the state of delivery. This one's a bigger one, and you could use this too, but I want this one as well. So you could have them both marked up. They both work, but the most precise one's probably going to be this one right here, but this one's valid as well. And then you would measure out mean threshold on both of them. But if we go to our 1-hour chart, coming in, we're obviously bullish. I think everyone knows we're bullish. We're creating higher highs. Don't try to short all-time highs. It's not going to work out for you. And if it does, then you got lucky. So going in, we have 4 a.m. We're not even trading then. At least I'm not, because I wait until New York. So at 9 a.m. is when we get our first candles. So I'm going to go ahead and replay this. And then, so right here, we have an SMT with ES. I'm going to pull that up right here. Or I'm on ES. Let me go to NQ. And there is I know my chart is a mess, but we have an SMT with these lows right before 8:30, which is very nice. We're way below opening price at midnight. So if we're bullish, this is even better for us. Opening price is 12 o'clock. It's when the new candle starts. And that means basically we're in a deep discount if we're bullish, like very deep discount. 8:30, if you can get below 8:32, even better. But that's not always the case. But here, 8:30 would be this right here, key time 8:30. 8:30 is a key time for everybody. Just like 9:30, it's just 9:30 is a little bit more hectic sometimes. But right here, this is my entry. It's a change in the state of delivery with the breaker. It's any time frame. Honestly, 5 minutes where I found the best, but 1 minute you can kind of be a super scalper if you want to use it on 1 minute. I mean, there's really not much other than we're all-time bullish and below opening price at midnight with an SMT in a key level. And you can tell when we respect that level, like we're not, we're consolidating in it. You don't want to see consolidation if you're bearish. And what do we have resting above us as a draw on liquidity? Why should we go up? London didn't do shit. I'm going to be honest, London didn't do anything actually, besides drop us into that key level, which is important. But if we're going to go lower, we must go higher. That is a concept you all must know. And yes, use limit orders. They're perfect. If you can limit order every trade, that means you already know what you're anticipating. I would limit order every trade. You can mark it when you get more seasoned into it, but limit order to start. You have a new week opening gap up here that is obviously a 70% likelihood of a draw. If you don't believe me, go back test it. And then you have Asia high and then external buy side, and they're all clustered together. I love seeing clustered highs together. That is my favorite thing, because guess what everyone else does? They draw a fat box around that with a red thing on it saying that's the ceiling and we're going lower, baby. Pack your bags. And I'll answer you guys' questions in a minute, but I'm going to keep going over this. And you don't really get too much of an entry. This would have been a beautiful entry, but I hate entering before 9 o'clock because you're going to fall victim to a wick most of the time. And even if you're anticipating it to be just distribution and not manipulation, you still might fall victim to it. So it's not as high probability, but if you already know the draw, guess what the beautiful thing about trading is? Everything is fractal, so hunt on a lower time frame. So in this 5 minute, we have a fair value gap. I am anticipating this to be respected, and I'm targeting these highs. So I immediately drop down a time frame to a 1 minute because it's a 5 minute, and I hunt for a setup again. And then what is my setup? It is a breaker. So this, you could enter off anything really. I mean, if you know where the draw on liquidity and the bias is, and you have a narrative, an entry model is the least of your importance, but it just gives you at least better risk. But here's my entry. I actually don't even wait for it. I take it here. I don't need it because I already didn't just targeting Asia. I don't really give a shit what else we do besides Asia. I just want Asia high because that is most probable. And then where does your stop go? I put my stop. If you measure out these candles, I put it right here, right just below mean threshold. A breaker's an order block. So mean threshold should not, and most of the time will not be traded to. And if it is traded to, it's probably a losing trade. So, let me pull that back up. There you go. So you can see the risk. Let me make sure. Yeah, that's right. It's almost 2R. I'll count that as 2R. And that's even missing like the best possible entry you could get, which is not all the time you're going to get. But if I could get my best entry, I'd be choosing this all day and just literally holding on for it, because all this would get tapped and then partialing out at new week, this high, and then maybe leave a contract on for the last high. But should I use a limit order or a market? Because giving LSR have confirmation. Oh, you already answered that. Are those previous low liquidity internal sweeps? Also, do you weigh the liquidity sweeps as one being taken out first before the other? Explain more on that. Because are the previous low, just unmute, it'll probably be easier. You don't need to stay muted. You don't need to have to type it out. It's probably easier if you just explain it, Caden. All right, well, I'll try to figure it out then. Oh, there you go.
Yeah. So, kind of before you get your entry point, does it matter how many sweeps are previously on the bottom versus the top? Like you were saying, with targeting the sweeps from Asia highs and London highs, that does the amount of sweeps matter to like where the market would anticipate to go? I could probably explain better.
Yeah, I get what I think I can understand what you're saying. So like you're just asking like, so with this right here, so we look at this as just internal. So we take that out. Obviously we all can fade that because we're bullish. So are you asking, should we come back down and take it again? Because if that's the answer, or if that's the question, then absolutely not. Because if we've already it's called purging. So realistically, if we've already purged this liquidity, we should leave that range completely, as we do here. You don't want to see it just take out liquidity and basically liquidity sweep everything. You really just want one, and if you can have a key level even resting in that low that you're anticipating to get swept, or just above it, which is ideal for everybody. You want a low that's just resting right above it, which unfortunately this one isn't. But you want to see something like that's, because I mean retail's looking at this, because if you think about it from a retail thing, retail's looking at this like we're going in a triangle pattern, and they did win today, but normally they do lose. And if we manipulated down too, I would have been still bullish. Nothing would have changed for me. Absolutely not. I would have taken my trade even better if we manipulated down, but we didn't. It's just it's an if then situation when it comes to that. But once you have the time, then you can kind of anticipate when it should take liquidity. And if you're at a key time like 950 to 1010, it should just run. Really, it shouldn't take liquidity. It should just run. And if it's already taken it before 950, you can anticipate 950 to 1010 just running up to your TP or whatever you have in that area. For that reasoning is because it's a macro. Your macros are where price is really delivered efficiently and it's fast. Those are like that's the real thing about time. That's what everyone fails to do. Is you have all the concept. I'm sure all of you, most of you, know enough to be fine. You don't factor in time. Time is if the most important. That's why it's called time and price, not price and time. And I fell victim to that just like everyone else and fucked up completely. Because I was just like, I need to learn everything about market structure. And then I was like, all right, a year and a half later, I'm like, what am I doing wrong? And I was like, oh, I forget time and price. So then I started learning time. And then about 7 months later, I was like, holy shit. And that'll probably make your win rate a lot better, because then you look at time like 930. I always look at 930 as manipulation. Even if we would have came down, it would have been beautiful. But we didn't need to really, because London already came down at 3 a.m. in our key level, mean threshold. If we're coming back down, I really am not that excited. So, I mean, it's kind of an if-then type of thing. But if you're entering, I would tell everyone to at least like try and use internal liquidity when you're taking an entry. Like have it take a low in your key level, which is you can use any key level once you already know where it's going. And if you're in a trending environment, fair value gaps are going to work. It's not going to fail. If you have a draw on liquidity, they're going to work. So if there's a low, you can go on a lower time frame on a 1 minute. And you can, that's called turtle souping too. Turtle souping isn't buying at this fucking low. It's buying it. It's like anticipating. Let me see, because it's all on lower time frames. Everyone thinks turtle soups are on fucking 4-hour charts. It's not true at all. Like this right here could be a turtle. I mean, I wouldn't say this is a turtle soup, to be honest, because even that doesn't seem as sufficient. Like you want a 1 minute turtle soup, to be honest. But I mean, I've traded that for a long time, and I found the best success rate with a 1 minute because you have confirmation. That's the one thing about turtle soups. You really, really have to know. But I got way off topic like I normally do. If you want to re-elaborate it, if I didn't answer it correctly, I probably have another answer I could, if you're still confused.
So let's say that sweep was not taken out. And so there's two sweeps that haven't been taken out on the bottom. And I think I see on your left screen, there's
this one,
2. Yeah, that
these
one and
two.
the last one weren't taken out.
So these three. So these three right here, right? Just making sure.
Yeah, if they weren't taken out, is it like a bottoms versus tops comparison? So in a way, so there's 3 lows, and then there's 1, 2, 3, 4, and it continues upwards. And yeah,
all this. I see what you're saying. Yeah, all this. Like, well, yeah, I see what you mean with all those highs.
Is that a bullish bias?
I'm all right. So this is a 15-minute chart is simply where I mark out liquidity because it's really nice to see liquidity on a 15-minute chart. I don't derive a bias from a 15-minute, and I wouldn't sanction you to do that either. I would go on a higher time frame, at least an hourly. I mean, if you're trading really 1 minute, you can be fine with a 4-hour. But I mean, I start on the daily because I look at the daily. Like coming into today, what is today? Monday. I come in today. That doesn't. I mean, it doesn't tell me anything, but it tells me, hey, we're bullish as shit. So don't look at shorts. We don't have any confirmation at all on shorts on the daily. 4-hour. I didn't like this at all coming in on Friday. I didn't like how we wicked above that. So I kind of thought Monday would be, just a rundown. But we didn't get that. I kind of always weigh out the daily, even though the daily at the moment, normally the daily is where I derive everything from, but we don't have any information on the daily, unfortunately, because we're in all-time high territory. So then your bias will always be bullish until proven otherwise. And you'll thank me later because half of the time I'm going to save you from doing shit I used to do all the time, which was this looks so beautiful on paper if we had stuff over here. This would be like a beautiful... I know. I almost got tripped up this morning because I was like, fuck. So I waited, and on a 1 hour, we expand through all this. We take external, so now I'm like waiting. You don't need to have a bias today. You could skip Mondays, and I would tell you all to skip Mondays. They're not very important. You don't need to trade every day either. You can trade fucking twice a month and still make more money than you are at your job right now. I mean, it's so... You don't get paid for your time in here, unfortunately. If we all did, we'd be millionaires because we probably all spend a lot of time trying to learn these markets. But this on paper looks very nice. Like if we ran all this and came down and broke it, and then overnight, it looks like we're bearish. I mean, I'm not going to deny that. It looks like we're bearish. Okay. But you have nothing to really confirm that yet until like this right here. I can so see how everyone was taking shorts today. I really can. It's so like, this is literally, and I'm going to tell you this, we're at all-time highs. You can't fade that yet. You have to fade it. Unfortunately, you have to fade it. Even though this looks beautiful. And also, if this would have done this, I would have taken shorts today. If we would have ran up and took that high and then came down, I would have been so bearish today. And I probably still would have lost, to be honest, because we're at all-time highs. Like, and it took me so long to realize, just follow the... I mean, I hate saying this because I hate fucking trend lines and shit, and I don't believe in trend is your friend either. But in all fairness, just only submit to all-time highs until we get... you get at least a 4-hour. Like if the 4-hour went down here... Is this on replay? It is. If the 4-hour went down here and closed here, then I could frame something. Like then I'd be, targeting, I'll just eyeball it. I'll target like 0.5 of this wick. right here
It's
because
actually a
wicks are
lot more
gaps.
important.
You just need,
It's all on.
it's one of those things you just have to submit to. Unfortunately, I hate that that's how it is, but I would tell everyone in here to not try and call reversals. Save yourself the headache because I try to do it all the time. And even though I'm pretty decent at it,
Yeah.
I will never be able to call an all-time high reversal, and that does piss me off. But it is what it is.
Yeah. It's like today it was completely bullish the whole day,
Yeah,
besides one sweep, and that's where I thought it would do a reversal. Like we had a break of structure,
hmm
a inverse fair value gap, but then it got inversed again. And so
yeah.
just yeah, like right there on your screen.
Where's it at? Right here.
Higher, it's pretty much it's higher than that.
Is it a 1 hour? This one.
How do I say this? I think it's
And the thing is, with today as well, I'll add this in there. This is a breakaway gap, meaning like we left this. This is balanced. We've offered it on both sides efficiently. And if we're going to come back up to that, it has to be wicked in. I don't want to see it get closed in at all. And you can go to a lower time frame for this. 15-minute cuts through that. Your bias is immediately invalid. So honestly, even if you were taking shorts, you just would have had no money day, which is even better than winning money because you're recognizing conditions and preserving capital. So either way, today kind of invalidated both sides. Because if you look on a 1 minute, or invalidated shorts really well, because if you look on a 1 minute, we just cut straight through that. And you want to leave room, like it's kind of hard when using a 1 hour level, but normally like you want to see some sensitivity, because I can give you the same example of today. I was looking at it today because I was like, damn, like I could see how because I was getting a little confused after I took my long. I have a lot of shit on my chart, but let me clear this up. So this is the same thing. We have the same thing as right here. I was back testing this today, literally. And where's 9 a.m.? We'll go to here. This looks like the same price movement. We have the same thing. Guess what we have over here, though? We have other data to use. Because I was looking at this today. There's an SMT. This is when they were all the way. Let me go to a daily. I go to a daily. I went on to a daily on here. Nice. Or 4 hour. So this was in this mess right here. This whole mess, which I did that video around. But where did I just come? All right, here we go. So we're right here. Let me go to I wish you could replay both on TradingView. But you can see this high on ES gets taken. So we have other information we can use to frame a narrative. All right, let's clean this up too.
and that's within a few days. Yeah.
And then we have a change in the state of delivery on a 4 hour, which is so much more significant. So we can already anticipate. Actually, we don't even have that yet. So I wouldn't even tell you to take a trade today on that day. I would tell you to wait because it's Friday even way. So, and we come back down. So we're at all-time highs again. We take a high. So it's like, all right, do we want to fall back into the range? Or sometimes this could roll over. And this is what I've been testing on my own is when we're at all-time highs and we just literally, I've tested this same thing and we'll just sit here and go from order block to order block to order block to order block to order block until like a seasonal tendency hits in and actually respect it. But here we don't. So then you could say, all right, we have a bias now. It doesn't mean you're wrong. Like, it doesn't mean you're a bad trader if you wait until 10 a.m. Wait for this 6 a.m. candle, but I don't know why TradingView does that. And then you just go down a time frame. But we take out everything, so you probably wouldn't have a trade that day. But you don't need, you can wait for confirmation is what I'm trying to tell everyone. You do not need to try to call this up here at all. You don't need to call that. It doesn't matter because guess what? People are going to be shitting their pants the whole time. They're like, oh, they don't have as much confluence that's going to get called because the change in the state in the 1 hour is here. The market structure is here. The shift here. The break of structure is here. We just have a fair value gap and an SMT. That's not enough. At least for me, that's not enough. There's no gaps over here, and I don't really give a shit about this gap because it's not like a discount at all. So, but
Well, the daily bias is really upon multiple days.
yeah, I would tell you to. Yeah and no. I would tell you to wait until you have the best way I was at, like, and I figured this out recently, and because I was trying to trade every day, I was trying to figure out like, what am I doing this day?
Mm-hmm.
Why should I trade that day? If I see like, all right, we're in this, we respected that. I did trade this day because I have the previous day to tell me, all right, there's a fair value gap here. We wicked into it, respected it, took that low, so I can anticipate these are all relative on a lower time frame. We'll go here. I love using this example because this one tripped everyone up. So I can anticipate already that this is going to be the draw for this day. You don't have to have a weekly draw. I would tell you to, but if you're on, most of us are on 1 minute charts, so it's like it's good to know, but it's realistically just trade in the draw's direction. So, but if you're bullish until then, and then what do we do at this level? Well, we have an indecisive day, so I don't do nothing. I wait. All right, we run up. Cool, I didn't lose any money, and then we have put it in SMT at an order block. Oh, why do I lose this? Let me go back to the daily here. And then this is where you start going down to your lower time. You can go to a 4 hour is what I would tell everyone to do here. But we do SMT this. We SMT it 3 times. NVIDIA is going down, which is why as a top performer in NASDAQ, NVIDIA and NASDAQ are heavily correlated, just like ES and NASDAQ. So I would like tell you, and Dow Jones. So I was looking at Dow Jones and NVIDIA, and there's an SMT with them, which is a great confluence in itself, but I just need to see more. So what happens? Well, what is Friday? So you just skip. I would honestly tell you all to skip this week. Like I would be like, all right, is it cool to trade this? Yeah, you can anticipate it, but what are you going to make the most money in? Knowing where it's going. Your trades are going to be way better. You're going to be way more confident. So with this day, you are given everything you need to take a short to this low immediately. Okay. Immediately. Absolutely immediately, because then it's like you don't know if this is going to get respected. This is a breaker on a 4 hour and a daily. So we have a breaker and an order block that takes liquidity, so it's a high probability order block. And then you can measure out mean threshold. Mean threshold got respected, so you can already anticipate this day, or you could even trade this day. But if that's a whole different thing, because that means you're basically trading a manipulation, and that's honestly I don't those are good and bad at sometimes. But this day, you immediately know where the market's going to go. Like you just know. Like you're just like, I have enough to frame a bias. I have enough to frame a narrative. I have a draw on liquidity, these lows. And that's one step. Unfortunately, that's one step, which is a hard step. I'm not going to lie. Like then it's just entering. Like you just have to be like, all right, so what should we do before then? And the way I look at it is like, it's gaps, because obviously we're not going to come up to this because this is a breakaway. If there's multiple gaps, you don't want to see all of them fill in. That's just not very good. That's not very bearish. But then you can go to 1 hour and then be like, all right, we have a fair value gap here. It's 4 p.m. on Friday. Let me scroll it up.
Yeah,
10 p.m.
The hardest thing is like if you just go into a chart from today and yesterday, it's like it doesn't show the broad view like what you're saying.
Yeah, that's what I'm saying. You can get chopped up in these lower time frames like crazy. I've done it. I think everyone has done it. I got chopped up, and it's better just to be like, all right, let me zoom out again, because I'm sure you heard, don't be too zoomed in, because we're all on these 1 minute charts, which I think our 1 minute charts are great. But I started on a 15-minute chart, so I was like, I had to know where the day was going to form. I had to know because I was trading the daily range. I was basically trading all day. I was going to trade for 6 hours pretty much every time I took 15-minute trades. Sometimes it'd be maybe lucky if I was 45 minutes at least, but on average 6 hours. So I had to know where's the day going to go, and that actually helped me propel. But unfortunately, I was on cryptocurrencies, so I was trading micro Bitcoin, which is a pain in the ass to trade. And this stuff works on there. I can tell you firsthand. I've traded it. I passed accounts on it. Yes, there is funded accounts for crypto. They fucking suck, but there is that. They're there.
I'm sure all of us, we have the confluence is pretty good, but I mean,
it's all coming down to the entry. Yeah, point of interest is hard because it's like
how it's looking for the week, like literally. And you don't,
right?
I feel like that
and
emphasize is important.
It is confluence is important, but once you have your daily bias framed, and then it's like, all right, well, then you have that step done, which is great. That's a good step. If you can get to a draw on liquidity and bias, and you're successful with getting that right, pretty much good amount of the time, you have successfully conquered challenge 1, and then you only have 1 left, probably 2 more, because then it's just risk management. But if you go to a 4-hour, we have a 4-hour fair value gap. So we have a 4-hour fair value gap. And if you're bearish, you're into, well, this is Asia. So Asia comes, all right. So London sweeps Asia's low going into 5 a.m. We know we're bearish. We've already tapped into this 4-hour fair value gap, or 4-hour fair value gap. And now we're going to zoom back out. Actually, I don't want to make this candle form. Okay. So we have, oh, this is immediate rebalance. So we have a breaker here as well. Like we have other PD arrays we can use to help us pinpoint. But if you want to get that, like, because that's what you're trying to do, because we're on 1-minute charts. So you want, like, where is it going to be like that tick rejection, which you're never going to get that, unfortunately. You'll get really close, but not all the time. So we have to keep in mind it's Monday. So if we're bearish, what's going to happen on Monday? Well, if you think about a power of 3 of the week, a lot of the time, it's going to be Monday's going to go up, Tuesday's going to make a high of week. Mm-hmm. So you could use some of that logic in there, or you could use daily profile. You don't want to see London take a low and start going up, preferably. It took Asia's low and Friday's low. But Asia made a high as well. So now I'm kind of indecisive. I know I'm bearish, but is it a good entry point for me right here? Not yet. That's what I would tell you. We need to sit and wait. So then you go, do we respect this? This is where you come in here. Do we respect this level? So we're in a fair value gap. How are we going to react when we're in this level? You can sit here and wait. All right, so we do go down. We leave a bunch of highs, though, so I'm kind of already fading this. We tap into a breaker, so I'd already want to see those highs get taken at either 9:30 or 10 o'clock. So we take lows at 9:30. I don't like that at all. So if we take in that account, then you could, this is where it tricks people up. And this is how you can get a good 1-minute setup. You could just immediately find entries on here because there's an inversion. And this is when you trade intraday data, because it's not likely that we're going to get a range expansion all the way down here, at least in the AM session. So you could flip your bias and you could be like, all right, well, these relative equal highs and we're in a fair value gap. We've already rejected 930 manipulated. And if we have even better, if we have an SMT, it's in a key level on a 15-minute, that's even better, because then you can flip flop your bias and that's more likely than it going and taking the lows that we have as a draw on liquidity. So then you could just wait for that to come out. And we take those highs. Now you wait if you want to trade both. So we take it at a key time, which is lunch. So lunch is either a reversal or a retracement. So we have to frame that next. So this is how you do your daily profile. So do we displace from here? Yes, we do. Absolutely, we do. All right. So Jesus. All right, never mind. You don't get shit during lunch. Why is it immediately 6:15 p.m.? We go from 12:06. All right. I don't know. That must have been a holiday or something. I have no idea. But this should be regular. This should be like 1 o'clock. So that's why I don't really like trading lunch unless you really know what the day's going to do. But then we get that break. So now you can start trading to lows as how I would view it. Because that's how you could frame both sessions. So you kind of have to take a little bit of more knowledge to, because this fair value gap on the 1 hour it did hold.
Yeah.
It was holding. It's just, and you probably, everyone here probably can notice, like, this is a fair value gap. If we're bearish, we're going to reject from this. But then it's like, all right, we hit it here, and then 930 comes down. So then you're like, all right, what am I doing? Like, it should be going, like, we got a market structure shift. Maybe I'll sell at this order block. And actually, you probably would have banked some profit. I'm not going to lie. Like, you would have probably made some money if you targeted this low or this fair value gap, which is below. Actually, I didn't even tap into that. But you actually probably could have made money if you guys trade order blocks, because we get that wick down. But in all seriousness, we're probably all trying to trade, to at least like this low or something. Or, I don't know. It depends on what time frame you're on. But that would be my approach to it. I would try and dissect everything, because then you have to look at how it's respecting everything. Because if we're not respecting it, we're probably going to need to take liquidity. And if we go to the next day, let's go to Tuesday. So there we get that 9 p.m. So I'm anticipating this to already start running lower.
Yep.
All right. So we get a London 3 a.m. fucking ginormous push down. Jesus. So we don't, yeah, I know, right? We don't really, so now we're like, all right, we know we're trending. So now it's like either hop along for the ride or watch it fold in front of you. So we'll play it a few more. I already like this a lot. So at 5 a.m. we drop down. This is not low of day in my opinion. Let's see what 8 a.m. All right, so you don't trade today. That'd be my bias for today. You could trade the reversal because you know there's always, if we take external range liquidity and you see like you go scroll down to 1 minute and we immediately come back up, what's resting? We're at least going to go to like a discount or a premium. So then you could wait. Honestly, you kind of have to wait for a higher time frame. So you could wait for this 5 minute to close. And then we get another entry. And then you have to be very nimble because it's like, all right, well, my entry would be this. And I think I did take this. This was FOMC. No, that was the next day. But then you could target like all this is beautiful. And then if you look here, this whole range of today
Could go higher, yeah.
is you could just target equilibrium of like this little price move. That's it. You don't need that much. You don't need a 6R. You could leave a runner on, but you can just target that. And then what's resting in that? We'll go to a higher time frame. A 15-minute fair value gap. You can target that. You don't need to target. No one is sleeping at night well targeting all the way back up here or fucking leaving it for all this highs. Like no one is. And you don't. And I didn't even trade that day. I knew the draw was that day, but it got hit already. So what am I going to do? I just wait again. Like it's a constant patience game. That's what you're rewarded on this, is being patient, picking your shots. And that is when you actually start to accumulate all of what you want in here. So you just wait. So this is time distortion. We're not doing anything. This is what a consolidation looks like. With internal, external range liquidity, we have internal right here. So we're not taking external. So I already don't like that. I'd like us to sweep that again, but we probably have an SMT if you want to know the truth. Oh, this is 6 p.m. So what would I be looking at? I love using 1 hour key levels. I'd be looking at this right here because it's like, all right, we already got the change in the state on a higher time on the 1 hour. So I'd be waiting for this. So let's see if we tap into this. I guess we do not tap into that at 9 a.m. So this is like, I don't necessarily like this. So I'm technically just watching it. I'm just going to sit here, wait, and I'm going to be buying at this level. So if 9:30 could, oh, we don't get anything at 9:30. And this is where you align everything. Like we just took this high. We probably already have an SMT. We're going down. What's below these lows? 1 hour fair value gap. This is when you can counter trend. This is how people like that are really like want to do daily bias really well. You just switch your bias and recognize what's the lower time frame, and then you trade with the intraday data. Even though you're weekly bullish, you're daily bullish, but you're trading the lower time frame bias, which right now I would be wanting these lows anyways to come if I'm going to be bullish. That's what I was talking about in my video. Like if you can make sides for why it should go to this level for both reasons, it is so beautiful. So like I'd be wanting that, but then we run up immediately. So you just don't really take a trade. Or I may have took a loss that day. I think I did. But when we're this close to these highs though, it's not really good unless there's like a really large spike down, which we don't really like. There's no displacement in this. There's no fair value gap at all. That's when I notice there's displacement. We get displacement through this high. So I mean, this one's kind of a rocky one to me. But the real thing is like if you draw this out, that can be your level that you can nimbly precise it. But you want to like keep going through it. Like this would have been even better. Like if there's a 1 hour fair value gap and there's a 15-minute fair value gap and the 15 minutes inside of it, then you can, narrow it down because we're on these 1 minute time frames. And also, oh yeah, I didn't take a trade at all this day, definitely. And recognize these. If you see this, turn off the charts. You don't want to be trading in this. Even if you know where it's going, don't trade it because it's going to do some weird shit. I promise you. I've gotten caught up in this mess so many times, and that's probably a high impact news event too on that day. So then if you really want to trade every day, you wait. But look what we get. I think we get that anyways. What were you saying, kid? Sorry. I know I ranted on again. But if we have so let me make sure this is, so now we have a little bit more data. Like we have an SMT here. And we have a run through a fair value gap, which I love seeing this signature is when we break through it and we come back down and retest it. So immediately after this candle, I'm mega bullish. Like I'm like, all right, this was faded. We have an SMT here. and we're about to get a 4-hour change in the state, which is just all these down close candles right here. We close above them, and then this would be our market structure shift, not this thing. This one's way more important to me because we rebalanced it. So that would be like an intermediate term high instead of a short term high like this one.
Would you say the fair value gap, does it weaken every time it's tapped into?
No.
No?
Yeah, it's not like supply and demand. It doesn't really matter if it gets tapped into. It'll always reference that level. It don't matter. As you can tell on the daily. Let's look on the daily. We tapped into this fair value gap, and look what we used to bounce us up, this fair value gap. Yes, we need to take a low, but look where the body's closed. Inside of this fair value gap, and even on a 1 hour, but even on a on ES's chart, it was a lot cleaner to look at because we see this right here. We drag that out. It's going to reference that. Like, yeah, you could be trading that. This day would be beautiful. This day would be beautiful. We didn't deliver like that on a Q, but there's 2 days of only bullish trading. You know the bias, you know the draw, so there you just take the trade. Actually, you can trade that day. So if we come in there and then we're like, all right, what do we do after that? We slam down. So now you know what this day is going to do. This day is more than likely 100% of the time is going to take this low. Yeah, it will be posted, Pablo. 100% of the time it will take that low. Because you don't want to see, I hate seeing this signature because it's early signs of reversal to me. Because I've studied this. This was my main study because I wanted to beat the top-notch reversal dude, which I don't even recommend because it's fucking pointless. Like, who cares if you call this day at all? You're going to be sweating bullets because I know I was, and I've spent hours and hours and hours trying to call this day, and this is the high of it. But you're going to be a lot more comfortable trading this day. Skipping this day. All right, what do we do this day? We slam back up. So then you go to a lower time frame to validate it. We slam back up. We know where the draw is now. And this is a model in itself. We have an SMT. We're respecting the fair value gap. So what's likely to occur? We work in probabilities here. So the most probable thing, we're in a seasonal tendency that's bullish. We're not expecting it to run all these lows, like these lows back here. Everyone was like calling these lows, and I was like, you're so full of shit. Because it's not time. And time on a intraday chart is important, but even better is time on a monthly chart. Like seasonal tendencies. I know this gets slept on like crazy, but if you reference a seasonal chart, you'll fade all this shit because it's like, it's not time for price to go take these lows. And that is when it comes together because it's like, yeah, I can wick this low.
Yep.
It can wick this low. If you go look here, we'll show, this is what I was referencing the whole time. Let me show you. So this website, Steve Moore has a better one, but I don't pay for it. So, but this one's not bad. So at this time, what month is this? This is, I think August. Yeah, August 20 or fuck, where are we? Oh, August 25th. So this one has a pretty good thing here. So in August, we have retracements. Everyone's fading this. And it's like, where do we have a big move? In September. It's always going to be September. It's always going to start a shift in some sort on the monthly. We're talking monthlies here. So if I want to be trading in line with the monthly, which I know this is going to give me some shit on YouTube, but I love trading. I feel more comfortable trading with the longer term trend and longer firm time frame. I don't know about anyone else, but even if I'm on a 1 minute chart, it doesn't necessarily matter because the monthly is a large range. It's 20 days, I think, of trading. 25 or something. 20 or 25. Pretty sure 20 though. There's a lot of things I can fuck up within that. So I am at least a little bit more comfortable, and it just gives you more confluence as it is. That's what it is. You want so much confluence building that it's just like you're stupid to not take the trade. Like that's kind of how it is. You want it to be so blatantly obvious and so just right in front of your face. And that is how you can kind of define a key level as well. Because if you're bullish after this, you don't need to be bullish down here. It doesn't matter. You're not in this to impress people. Get that out of everyone's head. You're not in this to impress anybody but your own bank account, I guess. If you want to make money in this in general, you're going to treat it like a business. Is it smart? Is this a good business risk to take a trade down here? Fuck no. That's like investing in not investing in crypto. I guess it does work out for some people, but that's like investing in some bullshit company that's probably going to fail in 2 years. So That's just because it has a payout of $10 million. But is it likely? Hell no. So you want to be like, you want something that'll gain you wealth over time. This is a little bit different than investing, a lot different than investing, and this can accumulate you a good amount of wealth in a couple months. Even if you're trading as nimble as I am, which is hand picking my days and cherry picking everything. Like, I don't like this, I'm not trading. Fuck that. Like I'm like a sassy bitch when it comes to how I trade. I don't care. Like, and guess what? It's worked out beautifully. If you're so picky, it's just like, oh, I don't know. I mean, I know we're going to go these highs, but am I going to could I get an entry in here? Let's see. Let's see if I could find my setup in this candle. Like, for all the way up here, I know the draw is these highs. Immediately, I know. And I think it's clear to everyone. Where are we kind of like, think of it like a magnet. Where are we where are we going? Like, why are we going up here? We've already inversed this. This is a breakaway gap. You don't even want to see it really trade up to here anyways if we're bearish. So that's already another confluence. Because we've already broken out of that range. We have a gap here and a gap here. This one can fill. I don't like even seeing that one fill if we're bearish. It should have just tapped in here left. Like this one right here. When we're bullish and our draw is this, we leave it open. Why do we leave it open? Because this isn't just like, you don't want to see every gap fill. Same with this one. You don't want to see it fill either. The better it is when it doesn't fill, the more stronger it is. Like this up here. Another confluence for everybody. Do we fill this in? No. Should we fill that in?
Back later day.
I mean, it can. I mean, that could be used as a draw if you're on a longer time frame, but I don't want to see it get traded to at all. Because the logic behind a breakaway gap is breaking away. You don't want to see, it's not a breakaway and retest gap. It's just a breakaway gap. So that is another thing I would recommend you all try and learn. Like, because a breakaway gap in theory is all it is when you have, and there's multiple ways to find them. That's what everyone has issues with. But how I find them is when we have a break of this level, we take a high and we break out, we have a gap here and a gap here. I am immediately disregarding the upmost gap because that is where it starts the break. That's where he gets the term breakaway. So it starts the break here. So I disregard that. And I don't look at that at all. I note it on my chart. And I know that's where my bias is invalidated. That is where it is invalidated. And it is permissible to wick up into here. So if this candle looked like this, and I get it to look pretty, yes. So if this candle looked like that, that's fine. It's okay to wick into there, but it has to immediately reject. Immediately. I'm talking like it cannot stay in that gap for long. But we didn't. And if it doesn't trade to at all, even better for bearish. So you can immediately sell on these days. And then here, same thing. We have the same thing right here, just like up here. This range is balanced. We've consolidated and left with one or two gaps again. We have a gap here. We've tapped it. We got a reaction, but this is a 4-hour as well. So if we haven't immediately left and started to, form some type of bearish structure. Oh, fuck me. My mic died. If we haven't immediately left that gap and like done some sort of thing to represent that we're still bearish, I am immediately just like, all right, I need to sit and wait. So now, but I already know just based off of how we're looking, we're going to these highs. I don't know if that's off of personal experience. I think I have enough confidence for everyone to be like, we're going to those highs, but we might not know, because then I'll look for a lower time frame and be like, all right, what have we done on the lower time frame? Well, we've got a change in the state. We have this fair value gap, but we've traded above it, actually. We're closing. Oh, that's not even the real one. We've already traded above it. We're using it as support here, right here. It is still permissible for it to go back into it and use it as a discount fair value gap, because we haven't really, like, I like to view those as like, if we leave this with speed and we come back, you look at the upper portion only, but we haven't really left it. We're consolidating in it. So we could go and take this low. So I'm like, all right, well, what do we do? Let's see if we can frame an error. 5 a.m. comes. See what London does. We have the benefit of London, everyone that trades New York. So I would use London, everything. So if London, let's go to a 15 minute. So we know the draw is these highs. So on a 15 minute, we're consolidating. So you don't want to trade that anyways. So you want to see what it does. We run that high first. We immediately slam down. This is AMD at its finest. So let's see. Did we get the higher time frame confirmation that we want to go down? No, not yet. This is probably where it trips you up, because everyone's looking at a 1 minute chart as soon as we take this high. This is an hourly trend. And just like, if we go to a 1 minute, I'm sure everyone can see a setup in here for bearish. Well, I don't know why my ES looks like shit, but everyone can kind of see a setup in here. Like they're like, all right, I'm going to go take a short and this for a value gap right here. We broke this on the 1 minute. This looks pretty clean. And it might work out, it might not, but I mean, you didn't have any higher time frame confirmation. It's going to lose more, it's going to win. So like, if we use that logic, let's see just what happens to this trade. Well, you win this one, I'm not going to lie. Like, that one's a good one, but very rarely does that work out like that. I would be waiting for this right here, for this closure or this closure, but we don't get it. So whenever we get that, that's more important to me. Because we close below all this. So now I can be like, and I'm still bullish, by the way. This is what I was talking about. Like, you want it to be like a mouse trap. Does it make sense for price to just head up from here? No. It wants to sell the move to everyone. This is why everyone gets tripped up. And where is going to be the most, like, where is it going to sell it and be like, all right, we're bearish again now, everybody. Everyone start selling. Everyone grab out your fucking playbooks and start selling these patterns. It's going to sell it at least below this fair value gap. But we're bullish long term. Daily's already told us that. The 4 hours already told us that. And hourly's told us that. We're on a 15 minutes. Now we exclude everything we have about the daily and about the week, or the weekly, the 4 hour, the hourly, to give us confidence is for the direction and the draw. I am only using this 15 minute to map out how it's going to get to me. Like, I want to cross roads with the market pretty much, essentially. And I want to get in at the perfect time. So it just is only low resistance all the way up. So for that to be the case, it's going to trip people up. We have all this relative equal lows, not a good one to be against either. I want it to sell the move. So I'm waiting. And we run out that. We probably have an SMT. So we'll go look. We'll go to that day exactly. Let me go to it really fast. And I'm probably still going to fade this, to be honest, because it didn't hit a key level at all. Or at least, did we hit a key level? No. We can reference this hourly, but I fucking don't like the hourly one at all, to be honest. I don't like that one. Because it's already got sell side resting in it, and I want this 4 hour, or actually it was a 1 hour gap. I didn't note that. This is why I hate doing replay, because I go too fast. But you would be referencing this order block right here, this order block right here. And then you would have this inversion, and that's it.
Can they stack up?
What do you mean?
So,
like order blocks? Are you talking about order blocks? Can they stack?
Yes.
Yeah, it's called a propulsion. So like this, this digs in.
Built up.
But this is like, these are order blocks in a sense to where, like, if we're bullish, you want to see buying opportunities in these candles right here. But an actual order block would be like this on ES or ES NQ. So like this I would view this as an order block. An order block, that's a whole definition for everybody. That's why I got up my notes. And this is not some rebranded bullshit either. It's straight from the source. So everyone cannot tell me I'm full of shit on, not you guys. You guys are good, but I'm recording this, so who knows what I'm about to get. It could be like, you didn't read it right. Bullshit. The lowest candle or series with a down close that has the most range between the open to close near a support level, or when we hit a support level. That is the exact definition of a order block on a daily time frame. A little bit different when you go to intradays. So, or even 4 hours. So like I would view this candle right here as an order block. This one right there has the most range. We get that range expansion. So what is this candle? A propulsion block. It's another type of order block. So this one has a different set of rules. A propulsion block is simply an order block, another one, that digs in to this. It's a candle that digs into the order block. So a down close candle digs into this order block right here. So you grade that. You absolutely do not want to see a propulsion block really even trade in here that much. Like you want to see it absolutely leave with speed in the upper quadrant, which is 0.5, 0.25, and what is that? 0. You want to see it realistically, the best scenario, you don't even want to see it close near midpoint. Like that's not a good sign to me, which is also why I was like, I don't like that either. I had already foreshadowed this becoming a problem for this week right here because we closed below it or we closed near it. I don't like to see that on these. These have a different set of rules. Think of it like this is a way more sensitive order block. It should be treated with the utmost sensitivity if we're bullish. But you have to realize ES has the same thing too. And if you grade that one, this one is beautifully delivered. Perfect. I'm using the open of that candle, by the way, not the fucking wicks. So if we grade this, we have 0 closes. The wicks do not matter. The wicks, all right, let me reword that. The wicks are gaps, but in theory to like, oh, we wicked all the way down here, we're bearish. No, that means it's that the bodies tell the narrative completely. They tell the whole story. The wicks do all the damage to everybody. The wicks is fucking retail finding what the hell they're doing half the time. So on ES, we get this perfectly. I mean, this is butter on ES. This is why we get beautiful delivery to this high. Like this is such an easy move right here. You don't even need to trade this day, but we're bullish, so you could already anticipate this day being a reversal anyways, or this day as well. If there's high impact news, which NFP was Friday, hence this Friday. So you can already anticipate the range that's going to form is this day. You got to factor in news events as well, because that's when price is going to be. If there's a really high impact news event like PMI tomorrow, everyone watch out, folks. PMI is a large or a medium. I think it's high impact news. Let me pull it up on this stuff here. So tomorrow we have, PMI, I was right. PMI right here. Red. It's red impact news. So what does that mean? How am I going to use that in my trading? That is, you do not want to take trades at 9:45 a.m. You know why? Because it's going to be half of the time, 90% of the time. Let me reword that. Manipulation. It's going to manipulate you. It's going to be absolutely crazy town. You will wait until at least 10:10, in my opinion. Do we have we have fucking pals and we have pals speaking. So I think tomorrow shouldn't even be a day you trade, to be honest. That is my opinion. And if you are willing to listen to my advice, don't trade tomorrow. Tape read it. Look at the market, because it's not high probability, because the real move probably won't start until the PM session. If you want the most, advanced thing there, it's not going to start until the PM session. Why won't it start until the PM session, guy? All the high impact news is based in here. So the real move, I look at news as like they're trying to sell you some bullshit narrative. Like I'm on YouTube, I can't say anything, but we all know what's going on in the United States. So you want them to give you a narrative, like sell you a story. So that's why everyone, when Powell speaks, the market goes to absolute toast and FOMC events go to the ground. And everyone's like, holy shit. That's because of market manipulation. That is when you can anticipate when the market is going to be manipulated. And that is not high probability at all. 0. You will have the worst time trading in that. I will guarantee and promise you 100% of the time, it will not be very fun trying to start trading at 12:35 or 9:45. The whole AM session is absolutely cooked, in my opinion, tomorrow, because I don't want to trade that. The PM session will probably be the most efficiently delivered one, because you're going into lunch. So, I mean, you might get good delivery in PM session as well. Kind of went on a long one there. Went on a long tangent. But is there any more questions? Or do you have more, Caden? I like answering yours.
No, I didn't mean to bulldoze anyone else. But
oh, you're good. 3 row, 0 1. Any of you? All the other people will have to type it in my comments on YouTube, but 0 1, is that your actual name, or is there a different name? Well, I have stream remote enabled.
Was I unmuted this whole time?
Oh no, you were on mute, but you're unmuted now.
Oh no, my bad. For me, I probably just asked more on SMTs.
SMT, okay.
When I seen to back test, say like on an hourly SMT, sometimes they tend to fail for me, and then just keeps rallying up or in the opposite direction.
You got to have something that confirms an SMT. That's it. What confirms an SMT is a change in the state of delivery, which is a series of down close candles that get closed above. So like when I reference this daily, all right, we'll come back to this one. So this daily SMT, it don't mean shit until I have confirmation that one's going to hold at all. Like it doesn't mean anything until we go to a 4 hour and look at a lower time frame and be like, all right, or honestly an hourly, you need a higher time frame, at least an hourly, to confirm that SMT is going to stay in place. So we have an hourly change in the state of delivery. So that verifies that that SMT is valid to me. You can wait for a 4 hour, and I would tell you probably to wait, but this is a whole model in itself. Like this is, in theory, this is what offset accumulation is to the folks that know the old ICT core content shit. This is offset accumulation, which is just pairing orders below an old low, add an order block and a fair value gap. So if you already can recognize that, then that's great. But I would be if I was just like on an hourly chart, or if you're looking at like, let's say like these SMTs, like let's say this one, because you're probably taking something similar to this. Like if these two lows got SMT'd right here, like say, I don't know, ES took this low. That's not like, that's an SMT, but it's not a structural SMT. Like it's not like, this isn't really, I mean, it's important because we took liquidity out of this, but what's the importance of this liquidity at all? There is liquidity levels to this. There is no importance to this 9 o'clock one, and it still can be viable enough for the market to move, but you have to wait for something to confirm that SMT is going to hold, like displacement, which is just rapid moving in your direction. So like we close above this high right here with immediate speed, like we close with a gap, that tells me that like we're getting some institutional support from this levels in the theory on demo accounts. But I would tell you to do confirmation. And these lows, these SMTs, I'd be careful with if you're doing it on an hourly, because on a 1 minute, a little bit different. You can wait. You don't necessarily need to wait because an SMT is just going to run. But when you're on these higher time frames trying to do SMTs that are like not too big, I'd probably scroll out, because there's probably like this SMT is really good. So is this one, because these are structural lows. This is this is an old weekly low, or probably 2 week old low in a fair value gap. That's a lot. Like that's really important, because if we close below that with speed, that's an indication with red lights that we're very bearish. This, I don't really like. And when people do this too, if you're using bodies and not swing highs or swing lows, like a swing high is made up of this candle pattern right here. I'm just going to go over it. It's a 3 body formation. This is a swing high. My best ability of drawing one. This is like, they're called rings in the olden days, or ring highs and ring lows, if you really want to see how they look, because there might not be too many videos on them, but this would be a swing low. Huh? Say that again.
The day that SMT was made, you'd probably want to wait a minute.
Exactly. 100% exactly. You could take a PM session. It doesn't, like, waiting doesn't mean you have to skip the whole day. Waiting essentially means you just have to wait for it to relay you more information. So, I mean, wherever you get that information doesn't mean you got to wait the next day. I would tell you to probably wait the next day, because if you're on the chart at 10 a.m., and I know this from past experience, if you're on the chart from like 9 to 10 a.m., or probably even earlier for some of you, 8:30 to 11 I would say the average time someone's spending. And if you're like, oh fuck, I need to wait, you're gonna be like kind of amped up to take a trade, because it's like, oh, like you're gonna just be amped, and it's not very nice. I'd probably just tell you to wait. Same thing with here. This breakaway gap, we don't feel it. So yeah, but I would tell you to not really use these SMTs either. Like, I fucking hate these SMTs. They will sometimes play out and they sometimes won't. These need a confirmation immediately, 100%. Yeah, if it's with a body.
I just usually just use the off of like a 4 hour swing high or 4 hour swing low, or hourly as well. Or either that, or I try to look for like London session or Asia. So
those are good. Yeah, those are good. Like, those are good. If you get confirmation with those, that's probably all you're missing. It's just you just need to wait. Like, just wait it.
In terms of waiting for like the confirmation, what do you say? Like, so say there's like an hourly, right? Would I go to the 15-minute or 5-minute? Just
5 minute.
Varies. Okay.
So hourly 5 minute, 15 1 minute, 4 hour, or actually hourly can really, or 4 hour 15 minutes. Sorry, 4 hour 15. daily 1 hour. That's kind of how I use time frames, and that's kind of how everyone kind of uses them. You can be really like you can make your own 9-minute chart, but not many people are using 9-minute charts. I would drop it down to at least like if you're what'd you say again? It was an hourly. Was it an hourly or 4-hour?
Yeah, so either or. So
yeah, I would write that down. I would literally just write down if it's a 4-hour, wait for at least a 15-minute because there's 3 or 4 candles in every hourly on a 15, so it's a little bit better of a confirmation. And it normally takes at least an hour for it to confirm itself. But if it's a 1 hour, 5-minute, and then if it's a 15-minute, drop down to 1 minute, which is normally where those SMTs form that everyone uses is on a 15-minute, so everyone's waiting. And if you have an SMT at the highs, no one's taking the short immediately when the SMT forms anyways. But that's probably all you're missing, to be honest, is just going down the time frames. And there isn't a correct way to do that either, but that's like the most best way I found to at least align the time frames together. That's just aligning it. Like I felt like that was like the perfect sweet spot for me.
Yeah, my biggest thing was probably just the confirmation part. That's pretty much it.
Yeah, so you're fine. And once you just figure that, I'd back test that, and I bet you'll see a lot more success rate with just using that on its own, like honestly. And then using your entry. No problem. Oh man, I've been doing this for an hour. Sorry to keep you guys this long. If that is it, or if you want me to go over something, I will go over any asset and tell you what I think will happen. I have no problem doing that. I would tell everyone to always reference the dollar index before I depart. Dollar index is very important. And why is it important? Is because it's inflation. Dollar down, indices up. Dollar up, indices down. Negatively correlated with everyone that trades futures. That doesn't mean go sell short if the dollar's going up, which I want the dollar to go up. We inverse this for value gap, by the way.
With the rate cuts, it should go up, though, huh?
Yeah. Bonds are also another one you use. So the T-bonds, you can see I have my T-bonds absolutely insane. But you don't need to trade bonds. That's not what I'm telling everyone to use. But referencing, it's called multi-market analysis, which is another thing for bias. If you want the whole entire, like, I want to know bias right now, and I want the most probability in my direction, it is literally institutional order flow, which is our down close or up close candles acting as support. Are we having to, if we broke market structure in the last 20, 40, or 60 days on which time frame and which direction have we broke? And are we in internal or external range liquidity? We're in internal. So, and then we have more, then you have fundamentals, so seasonal tendencies, and you have quarterly shifts, which is another one. This is like most longer term bias analysis I can tell you to do, which is not needed for us 1-minute traders. But if you want that extra confidence and want to be crazy with it, like me, do it, because I bet you'll be a lot more convicted with your trades. And then you start applying PD arrays, because it's like, all right, so we're bullish. We're in a quarter that's supposed to expand, a seasonal tendency that's supposed to expand. Market structure confirmed that we broke structure here. Sorry. And immediately on this day, you can go long. We have relative equal highs. I don't like seeing it just wick and take that high. That's why I hated how NQ took it on the daily chart. There's institutions really like to put their stops at big figures. If anyone knows what that is, it's just like 117 and 118, 100 on the bonds. On NASDAQ would be 25,000 because we're around the 24,300 something. But that'd be a big figure. Institutions use that in their analysis to put their stop or something. And then we have a fair value gap, which is internal range liquidity. We're in a consolidation, so don't be going for these external lows right here. But if you be nimble, then you could be like, all right, so this whole move was anticipated, like right here, just with all of that bias shit I just told everyone right there. You don't need power of 3 ain't going to help you on longer term, because if you want to trade with the monthlies to make you feel a little bit more convicted, then you're going to need to do a lot more stuff to figure out a monthly, because quite frankly, you're trying to trade the year at that point. So, which is really cool when you start getting pretty decent at it, because then even though it's not necessarily needed, I mean, that's totally overkill in my opinion now, looking back at all the shit I used to try and do just to hop on a 1 minute chart and trade fucking for 5 minutes. But if you want to be overkill, then I would tell you to do that type of bias routine. I have a whole thing written about, like, I can post my own bias routine that I made about like 9 months ago that will formulate you a bias every single time. It is a full system, but it's mostly based on experience, to be honest. Bias is all kind of experience, because you can't feel convicted with just like, if I give you everything I use, which I will if you guys want, just ask. You're not going to feel convicted to take any setups because you haven't seen it eat, breathe, and live on the chart. So, but realistically, man, I need to chill out. I always go on these tangents about shit, and then I forget what the question was. Who asked the question? I'm sorry. Was it you, Caden, again? Did I like totally misinterpret a question again?
I'm not sure.
Yeah, I'm known for that. That's talk about watching too much fucking Michael. You'll start acting like him at that point. You'll start talking about interest rates and what the hell's going on with the country when you're trying to tell someone what you do. So, but oh yeah, I would use dollar index because that formulates risk on and risk off, which is just when the dollar is going down, I like to view that as risk on. I don't really like how he does it. I do it kind of weirder. And then dollars going up, I view as risk off. So,
Okay.
which is just risk on, just means like, a lot more risk.
So at that break of structure, about 1, 2, 3 candles to your right of the center, or not the center, but go to August 25th, Friday 29, August 25th, just the line, because 1, 2 on the third candle it breaks the structure.
I already immediately know. You know why? Because I have time. That's why you don't. When you have enough like things of doing it, if we already came up here, I'm anticipating this to be support. There's 3 bonds that happen. There's an SMT triad, which is there's a 3 bonds type of thing that happens. So you see on bonds, this is 10-year. That's probably a 30-year, or that's just 5-year. So there's an SMT here. So I don't need to wait for a break of structure. But that's kind of the general rule. You don't have to wait, but you still need confirmation, is what I'm saying. So my confirmation is this candle right here. This is how I know we're going here, here, and here, and this fair value gap will be the final draw. Not trading this, by the way, but it's just how I use this to determine, because it's negatively correlated with the dollar index. So if interest rates, this is what bonds are, they're interest rates. So that helps you form what the dollar is going to do. And if we broke out, hit this daily here, or even a weekly order block, took sell side liquidity, I want this to be faded. I would love to see all these lows get taken. They all look like butter to me. And we're going to need some sort of news event to take some shit like that, because that's a lot. Like those are monthly lows there. And this is and what's on these little lines on my chart. This is what I was talking about when I meant quarterly shift. Every 3 months, there's a shift in market structure. You can see it right on my chart, breathing. So every 3 months, we have a shift. So right here, you could view as like a reversal profile, I guess. I don't know why that's labeled consolidation, but that should be reversal. Reversal or expansion into reversal. What these do is it helps you anticipate the next month's price action, is how I use them. You don't need this. So if I'm going to confuse you, just tell me to stop talking, because it's not needed at all. Like, it is not needed. This is overkill. This is for those people that want to absolutely want to know how everything works, which is not a bad thing if you want to do that. But if it's going to fuck you up, just self-assess yourself really fast and be like, all right, am I going to use this into my next determinant of bias to, and then it might fuck you up, because I be careful with some of this stuff, because I did the same mistake trying to learn every single thing there is about this stuff. And I fucked myself up for like a year and a half of just trying to fucking learn everything. And then it just didn't, like, I didn't have conviction of any of it. And I was never getting confluences because I had like 20 different ones. Sorry, go ahead, kid.
I'll probably stay away from that then.
Yeah, stay away from it. That's why I was getting into that. I was like, you don't need this at all. This is like, if you want to This is literally prediction at this point. Like, this is like, I'm trying to predict the monthly, which is so not necessary. It's cool when you do it, but not needed at all. Same with euro dollar. Same with, you want to see the euro dollar. I wanted to see these highs as well. This is how I use inversions, by the way. No one teaches how to use these things properly. It pisses me off. We don't break, we consolidate at this inversion fair value gap. Everyone thinks this is a failed inversion fair value gap. We don't reference this until it leaves the fair value gap. We don't fucking leave the fair value gap. I'm not like getting mad at y'all. I'm just saying, like, there's so many people that teach this shit wrong. We leave it on this move right here, and then you're grading it. This is when you're grading it. This is, if we come back down and fall short and close here, I am fucking so uninterested in this long. But we do not. We respect the upper quadrant and close above the 0.25. It's permissible to close at 0.25. Just cannot close anywhere below 0.25. In my opinion, I don't like that.
Then further into those, like on the, let's say you're like, okay, it's going to be bullish today. You go into the daily, and then where would you find, you would just use the same confluences within that day to find an entry point?
Yeah, so like, you need to, I would know every key level. That has been I will tell you my problem, and that is still my reoccurring problem. I do not know every key level. So that can mess a lot of people up, like myself. It does mess me up a lot. So on the daily, we have this area right here. We know this is a fair value gap. We'll go back on replay here. So this, we're not interested in this day. It already took, like, we're not interested. I mean, we could be taking longs because in theory, like, it should kind of burst through that, but we've gotten shit price action on euro. This is why I don't trade Forex. Absolute bonkers price. But if you look on a 4 hour, let's try and clean it up. You don't really get it clean. I'm going to be honest. Like, there's not really it's not precise enough. And on the 1 hour, it's just as worse. We just have this big one. So then I'd go back to my daily and I'd be grading it. So I'm just kind of waiting to see what price does in this area. This is where that waiting part comes in. So we come here at 9, well, this is 9 p.m. So let's go ahead. What the fuck? Oh, these run on different times. I forgot. 1 a.m. So I'd be, what is this? Where's 9 o'clock? I bet this is 9 a.m. too. Yep. So immediately when you come into open, so at 3 a.m., this is a best signature because you're already bullish. You don't need, this is where it probably confuses some of y'all. Y'all don't need any more confluences. You're on a lower time frame just to find entries and liquidities and targets. That is it. You're not in there to find, unless you're doing the other shit, which is trading and manipulation, which is like, you will do that eventually, I promise, to all of you. But getting comfortable with that is hard. I'm still trying to get comfortable with that, FYI. But we've already tapped into it at 9 p.m. London ran up, so we're still in London. So I don't know what we're doing yet. I don't need to know what we're doing yet because I'm not a trading London. And this probably wouldn't be a good London day either. You could wait to see how it reacts in this. You have to wait for more confluences then, though. But my area is this 0.5 level right here. This is like the golden spot for me. We've already took sell side. We've took buy side right here. And I want to see, does this act as a rejection block? Which is just a wick. Like, this is where wicks come into play because Forex has a lot of those. So is London going to support this? Let's see what London does. We get a wick at 3. They don't matter. Bodies are closing in. So we get that 0.5 level. We close back up. That's respecting that in my eyes. So I drag this back over. This is this would be my new rejection block because I'm anticipating this to be low of day because it's at a key time where the low of day is formed at a key level where if we're bullish, we should be reversing from this. We shouldn't be staying in the 0.5 level for that long. It's the same way with the breakaway gap logic. Fair value gaps, you need to grade them. Everyone needs to grade them because you're going to know and realize how important each quadrant is because it's going to most likely either, if it's a strong bullish trend, it'll go in this right here and leave it. But we didn't leave it. Like, we didn't speedily leave this. We got the change in the state, which I can see how that can trip some people up. But key reference, not at a key time. It's at 12 a.m. So that's why it didn't work out. Time. That's why it's time and price. So at 3 a.m., I mean, London would have gave you a beautiful opportunity, but now we just wait. So what do we do after that? We tap into that. I'm not expecting this to get taken. Why? Because it's London. London low. I want this to be a protected swing because we took liquidity. We don't need to take, if we're going to take another form of liquidity, that isn't signaling to me that we're very bullish at all. This should be protected. So we grade this wick. This is another thing. I'm grading this wick. How do we perform in this wick? We expand away? Yeah. I'd say that's expansion. There's no resistance in that move. One moment. My headset died again. Having a lot of troubles here. But we get the change in the state delivery, which is this right here. And we run through an inversion for value gap with speed. So now I'm referencing this. This is how you keep going with it. So we're out of this. We don't want to see really it come back down here at all. So I'm coming back to this, grading that. Let me clean this up. Grading that inversion for value gap on a 15-minute. So like, I'll run you through a trade idea. So we close above it on the 15. I believe so. So 545. So that should be the closing. So now we can reference this and you can see how we use this as support. Like there's an entry just in itself here. So at 545, I'm already anticipating these highs to come in because we've already worked our way down in here. When we close above that, we're going to use, and look at this. It's referencing these levels. Like it's probably, if not perfect, and this is 4x. Where's the fucking open on that? Oh wow, isn't that funny? Same fucking level. It's absolutely perfect. You can't get any more perfect than that because it is perfect. So I already want this to get ran. Probably pre-market would be my thing. I don't really like seeing it not get ran before pre-market. But if we come back down like we just did here, this is another buying opportunity. We're not bearish. So you look at this level here. We want to stay in the upper quadrant. It can wick down here. You're on a 1-minute chart, so you have to succeed to it coming down here, but you want to see it leave with speed on a 1-minute. On a 15-minute, you don't want to see a 15-minute really just come down at the midpoint of that fair value or inverse fair value gap. So we'll see how it reacts. So now we're just waiting. We're in an area. This would be your point of interest for me. Probably not key time because I don't think anyone's up at 6:15, but we'll use this as an example. So we're in an area. So now now you just simply wait. And the best form here is what I would tell everyone is to wait for liquidity to get taken. If we're going down, we're more than likely going down to take liquidity if we're already in a key level, if we're still not getting that immediate respect. So now I'm like, all right, we took this liquidity. It's not at a key time yet. We probably need to wait. So now I'm watching. We run through that, but this could be a wick on a 15-minute. So now I need to see immediate speed and rejection. So now I'm going to go back to the 15-minute. I don't like that, so I don't trade it because we don't get immediate respect to that. Actually, we make a fair value gap. So that invalidates this completely. And I haven't referenced this chart at all. I don't ever look at Eurodollar. So this is like me live taking you all through what I do. So now I'm like, all right, what do we do? We're probably going to go take an internal low. This low right here. So we wait. We wait to see what price. So now we're just spooling and we're in a consolidation. This is what this is. We're not taking the highs. We're not taking lows. We're just operating in this little area here. So now we're waiting. So now we probably have a high impact news event. So look what we do. Again, I probably should have kept this graded. Same thing with wicks. Wicks are gaps. You treat them like a fair value gap. So we have that wick graded at a key time. We're bullish. We have all these clustered lows. So I'd be looking at that same thing, 0.5 level. What do we do when we tap that 0.5 level? Do we displace above? Well, fucking, my God, I guess we do displace above that shit. That's probably 830 AP. Yeah, that's probably PCI or PMI or CPI or something like that. And that's where time comes in because price is not going to move unless it's time for it to move. So we just get this. We get this just chop and shit. You don't want to be trading in that either. So you have to rely on time as well. And in there, you could be targeting highs, but you don't get a trade. So what are we doing now? What are you doing now? We don't trade the news. Perfect example. We don't trade the news. We're still bullish. We're still respecting that. So I am still sticking with my bias until if we close this in. So I want to see after PMI. What do we do? It doesn't mean we're wrong. What is in here? We have a breaker. I fucking hate using these types, but this would be my breaker I would like to use because it's the series. You can include the utmost there too. It's an order block. So I want to see what price does in this area. 840. Let's wait till 850 because that's a macro. It doesn't seem like we're respecting that at all. What do? We close back in it. We do not close above. So this already isn't high probability for anybody to trade in at all. But if you want to be someone crazy, you wait till 9:30. I bet there's probably a high impact news event at 9:30 as well, because there's no reason what price is doing right now. So yeah, there's definitely, oh, there was nothing at 9:30. The bias was still bullish the whole time, but this is just consolidation. Like if we play out the rest of the day, it's probably just going to be a consolidation. Yep. As you see, and maybe PM might give you a good move. Maybe. But this is literally on a 15-minute. This is what you're trading. Chop. You're trading fucking chop. The only core move was probably CPI is what I would assume. But then we just go lower. Another 8:30. I think this was CPI and PMI on the next day. But you wait again. You do the same. It's the same boring shit every time. And and then you go into the next day. All right, new day. What levels would you be looking at? We still have our daily level. Keep that in mind. We're still respecting that. So we're still bullish. No reason to be bearish. But where could price like reject? Let me take this off my screen as well. Get all this other shit off there. There's not much of a daily one there, but let's see. That's going to be like cherry picking like a motherfucker, but trying not to like, damn it, I wish I didn't replay this because then I'd be like looking at this. You could frame it off of this low. We'll just do that. Lows are PD arrays too, by the way. So I would be like, all right, we're still bullish, but we're consolidating. So we can see that on a 4 hour. So we go on a 1 hour. That's just a consolidation. We can all see this. Yeah, we're moving lower, but we don't take an external low until here. This is an internal anyways. But I mean, they're both technically internal on the higher time frames, but we take that out at a key time with displacement. So now I would be interested in looking for possibly longs. So you draw it out again. There's a 1 hour fair value gap, 10:15. I want to see what does price do. Wait, we're waiting. We're gonna have another consolidation day. I think the moral of the story is to never trade Forex. Fuck me, it's all consolidations. I'd still be, yeah, this is fucking disgusting. What is every day a consolidation on Forex? Like, why do people trade this shit? Oh, wait a minute. Actually, yeah, I would want to see that be institutional order flow entry drill, which is how people anticipate that. I know there's like a million things about that people have no idea how to do institutional order flow entry drill. It is a breakaway gap. That is why they're so important, because it is a model in itself. That is how he does institutional order flow entry drill, is through a breakaway gap. But we have this here. So in theory, you could frame the narrative here because we have this breaker, up close candle right there. Closing of that. Do we respect that? Absolutely. It's the whole thing is this right here. It's just like an order block. But where's the sensitivity? Like an order block, if we're bullish, it'll be the most down close candle. Like you don't want to see it overlap the down close candle whatsoever. But like as you can see, these up close candles, where's the most sensitivity? We're bearish through here, imagine. We get the most sensitivity at that up close candle. So same logic. We use the upmost because we flip it because we're bullish. So we're using bullish candles because that's what a breaker is. Essentially breaking and mitigating orders. That is the logic behind a breaker. So we tap into that breaker and a fair value gap. That's my model. I fucking love this model right here. This overlapping model. It's called the unicorn. Before I get any shame about that. It is a unicorn model. But it is very strong. And he does say it's the strongest PD array anyways. So we have keeping that in mind now. So now we have something and you can frame it. That's a 1 hour. So get your 15-minute. This is how I like pinpoint. Where should it do? What should it do? Well, we have this. Now we have it like pinpoint. What area should it respect? Grade it. Grade the fucking thing. Grade everything. This is our 15-minute grading here. So what does price do in here? So at 12 a.m. we come down. Bang. What did we hit? This order block here. Why is this an order block? Change in state delivery. This will last down close candles at our key level. Breaker, midpoint. We take out liquidity. That's a high probability breaker in my eyes. Probably what SMT would, the pound or the cable, I think. So drag that out. The wicks are doing all the damage, of course. But then we have this nasty wick at 2 a.m. I don't know what the fuck happened at 2 a.m. But now we're in here. And let's see if we get another setup. Actually, we just took extra range liquidity. So now we could, this is how I would frame mine. This is how, like, if God forbid I missed the move, I am looking in this, there's a volume imbalance as well in here. Right in there. That's a volume imbalance. Note that too. Kind of hard to get, but where is that? There it is. So we have a volume imbalance and we have a fair value gap. We're bullish as shit. We know we're bullish. So we're anticipating this to hold, obviously. So we're consolidating. Now we're still waiting. God, why does my chart look like this? So in my opinion, I would want to see some sort of lows get ran like these or these. But this one's probably not as high a probability, but we're consolidating. I want to, yeah, there we go. We get those lows ran. So do we displace out of the range? Well, nope, we go right back down. Invalidated. Invalidated. No one's like walking anyone through their invalidations anymore. But that doesn't mean we're not bullish still. That's why I hate replay too, because you can't really like, you immediately miss the moves you fucking are like looking at. But that is why I'm so picky, and that is why I have the win rate I do, is because I am like, if I don't get a certain reaction, I am not participating. And you can see here, I fucking didn't author or fucking tell you to take any trade, and like the 3 days or maybe 4 days I've looked at, which they're all like different days, and I'm trading on PMI and fucking probably some crazy news event that's on Friday, I'm assuming already, because just how we're reacting. But all right, so we run that out. I'm pretty sure we actually had that hourly. Oh, there we go. Oh, we're still bullish, folks. We're still bullish. This is not disrespected yet. So you can do the same thing. We run out at 5:30. So do we get displacement out of that range? Yeah, we inverse the fair value gap on a 15 minute. You're just, and then I use my entries with the internal external range logic. We get immediate rebalance here. Beautiful signature. That's just when it doesn't leave room for a fair value gap. Like, that doesn't mean it's not strong, but when you have the overlapping like that, that's called an immediate rebalance. So it's immediately inefficient. So with that in mind, I want to see it just run. Like, I don't want to just be in it and it just consolidate. It should just run to its take profit immediately. And we should not get any down close candles. And we do. So like by this candle, you know it's invalidated again. You guys are like, God damn, this guy doesn't trade at all. But no, I just have a lot of criteria that needs to be met. So we tap into our daily breaker or daily level again. Same logic. We're still doing the same shit. It's the same boring shit every single time. Nothing is changing at all. We're using every level until our utmost invalidations. What would be like, this is end game, we're fucking gonzos. Would be closing at midpoint of this fair value gap. God, I wish they didn't fucking show this, because everyone's gonna be on, not you, but not everyone on the call, but closing on a closing basis at this midpoint. I am invalidated. I am not looking at every key level to respect at all. That is how I'm walking through it. But you see, so when it hits this, you can either go to a 1 minute time frame. I don't normally like doing that because there's not really a setup that forms for me, but this is so smooth. And 9:30 gives momentum. So like, I already want to see some sort of manipulation start. Like, this internal low looks really nice to me. But there's really not shit in this price move. So just on a 1 minute chart though, I'd kind of like to see some sort of manipulation take place, like a low get taken or something. Yeah, so we take that low. So now I'm looking at this as like, is that going to be a protected low? This is I'm walking you through the mind of myself right now. We go through those lows, but these are, this hit the daily key level so far. This is post 8:30. We're in a discount. We're looking for longs. So at 9:30, oh, this was not even 9:30 yet. So I'm already looking at 9:30 to run some sort of lows because it's manipulation. So I'd scroll back out and look at this. Could we run these lows? It's possible, but this is when you just wait. You just wait for some sort of confluence. So we break this high in here, and I immediately could go short as soon as we break this high. Because these lows are all so smooth, and you could just be entering on these order blocks in here as well. And like this would have been like ideal of an entry for me. It's like this breaker right here. Low, high, lower, low, higher, high. This is a mitigation, so as soon as we come back down and speed away, this candle gives you information. This candle gives you an inverse information, include the volume imbalance in that as well. Not just the wick. This is not the inversion. Not and volume imbalance is counted. So you grade that as well. How do we react in that? Are we staying in the upper portion? Yep. We expand away. Immediately on this candle, we're getting out. You could be a buyer in here. Actually, we don't even get an entry in there. But there's like, this would be a very beautiful day. And then what do we have looking above us? All of this. So you could target the utmost. So this, my eye goes to these right here. I want these because why those? Because they're so, it takes out all of this and they're all clustered together in here on a 1 minute chart. Like these are always going to get most of the time taken. So like if we play this out, I'd be more than likely take those today. At some point today, my God. All right, maybe we have to partial out this one, but it will take those eventually. Or there's like a 15-minute something. Oh, yeah. 15. Oh, all we do is drop back down into an order block on the 15-minute. Let me see if I can just show everyone a session trading here. So we drop down, series of down close candles. Let's see if we can find another entry. Series of down close candles. We take every form of sell side liquidity during lunch, which is normally the retracement if we're bullish and bearish as well, or it's either reversal. So we consolidate up here. So this is already like looking even better because we just have, I mean, this is nasty. Like this is, it's either going to be a run and it's Friday as well. So it's either going to set us up for next week, but you can get something out of this move. So if we displace over this high, we do. I'm immediately going to, like, this is beautiful for me. Taking along to this, like just targeting that, like that's not even bad. Your stop would be, well, with spread and shit. I don't know how Forex would work with that, but I'd probably leave it at the change in the state bodies. So you would be partialing. I'd be break even at this high, or I'd drag my stop up at least to the breaker. So I'm risking less. And let's go to like I guess like a 5. I don't know. I can't really see liquidity levels like that, but we'll just say we hold it on for all this shit. Or all of these highs. What time is it? 12:23. So price isn't necessarily going to move beautifully, but we get our first target there. And then, oh, look at that. I don't ever trade Forex, so I can't get that bullshit. Like, I just went on a 1 minute chart. Like, I've went on euro dollar just for everyone here. But that's when you can be super nimble, is because my trades are super high R. Like, you don't need to trade every day if you're trading 4-hour trades or, you know, 3-hour trades. You can take 2 a week. And if you're super nimble, you're going to win those 2 a week. And those 2 a week, you lose maybe, let's say you lose 2 a month. This is what I was trying to show everybody in here. I'm keeping y'all for a while. No, I'm about to call it for tonight. This is what I want everyone to look at today. This thing right here, this is a beautiful thing because it really shows the importance of what matters in trading to be net profitable for the month, the week, and the year too. So a 3-to-1 R trade, you have to have a 25% of the time likelihood to win. 3-to-1, that's only 3-to-1. 2-to-1, which is what all of us mostly do, even 1.5 to 2. So let's say it's like 36%, because some of us maybe do 1.5 sometimes in 2 hours. So we'll do 36%, right in the middle. Or a little bit, 36.5. That's right in the middle. So you need a 36.5% win rate. I think everybody here at the moment has a 36.5% win rate. I mean, I think everyone would agree with that. I think you win more than 36% of the time. So what's the real problem with your trading? You fucking risk too much. That's literally it. Like, if you know you win more than 36% of the time, or at least if you take 2 hours to 1.5 hours, which I think a lot of us do, and that's counting 1 hours too, by the way. If we all take at least 1 to 2 hour trades, you have to win 36% of the time. That's fucking crazy, because I bet everyone here has at least a 50% win rate. So what's the real issue with everyone's trading right now? Your fucking risk. Every problem is probably due to your risk. You know enough. That's like my saying of life. You know enough. You don't need to know more. If you would like to learn more, that's fine. But you don't need to know anything more than what you already probably do know if you've been doing this for a good bit. It's not a concept. And that was the hardest thing that I had to go and learn. Was there's no new concept that's going to give me this platter of money. Nothing that ICT is going to teach that's just going to make it, I just know now. Unfortunately not. I wish it was like that, but there isn't. But if you know you can win at least 5%, or not even 36% of the time, who fucking cares? Because you're going to be net profitable. Who fucking cares? 36% of the time. That's what? 30. So if you win, that's, I think, 2 trades a week is you winning. And then the overall in the year, that is 36%. Or no, that's probably even less. So with a 1.5 RR trade, let's take that, or let's take the 2-to-1, because everyone takes the 2-to-1. So if we lose 3 times in the week, we are still net profitable on the week. We 2x our money. Everyone thinks you don't make money if you 2x your money on the week, because everyone looks at social media and thinks of like, this guy made $455,000 with a $6,000 risk. He's full of shit. He never did that. So make that put into perspective on how important the other side of it is. Like, entries and point of interest is all important, but if you know directional and you could kind of narrow it down, you don't need a filter like mine. Like, you don't need that. If you want that, then all power to you, but you don't need it. It's not necessary. You can trade every day. If you have good risk, you will be net profitable anyways. So I would tell everyone now that already knows the concepts is fucking focus on risk. That's it. Focus, spend all of your time back testing the same risk every time. $200 if you're on a 50K is what I would recommend. If you're on a 50K PA or funded or eval challenge, $200, $400 on a 100K. 100Ks are bullshit, in my opinion, because they have 3,000 drawdown. I wish someone told me that. And do that repeatedly and see if you are net profitable on the month. And you will be fucking shocked to see what your result is, because you're probably like me and you're too worried about getting a 70% win rate, which is fucking fun and all. But a 70% win rate with a 3R is nice. I mean, that's cool. That's something to be proud of. But is it needed? Do you need to fucking burn and go through hell to get that? No. So don't put yourself through it. Don't waste your time. I am telling you, from my bullshit that I tried to do for the past 3 fucking years of trying to be Miss Perfect and try to get like the highest win rate there is, you don't need it at all. You don't. It's going to waste. You're just going to be miserable all the time, because it's like you're so focused on getting every single thing right, when it's like you don't need to do that. You just need to be right 36% of the time. That's it. Not 70. You don't need 70. You think you could be right 36% of the time? Fuck, you can be right flipping quarters 36% of the time. Be like heads as longs. That's what's really important.
Risk to reward, you so said 0.3 to, so 200 risk. That would be like, you'd be looking for 800 profit, right?
Would you say
at least?
Would you say 4R?
We are 200 on the 50K account, 200 risk, aiming for maybe 700, 800.
That's a 4R trade, my friend. If you're doing those, then that's really good, because you don't need to. If you're consistently risking $200 and you're hitting 4R trades pretty consistently, You need to win once a week, dude. That's it. 4 times a month, trading every day. You can win. Let's think about that. You win 4 times out of 20 days of trading if you trade every week. Or 4 times. You win 1 day a week for 4 weeks. So you win 4 times out of the month of trading and you're net profitable by 4 times.
Okay.
That's what really really I can't emphasize enough. And I fucking overlooked it. I'm sure like everyone else did because it's like, oh, I'll learn it later or whatever. I just need a stop loss because everyone talks about like you just need a stop loss and make sure it's in a logical level. Like other than that, I'm good. I won't be, I'll be chilling. Like I'm good. Then I got fucked on and shit on completely because I forgot to think about, there comes adding contracts and now I'm risking half the fucking account on this trade and now you're shitting your pants. And then like me, I lost it. And I'm like, well, my system doesn't work. So let me restart everything and flip back to fucking doing the OG method, which is sitting on back testing for 10 hours, miserable and hating my life. So that is what I would emphasize to you all. Man, I'm going to have no memory on this computer anymore. I'm going to have to buy a new one. I have made this the longest video I think I will ever have. It'll take a while to post this one. But I kept y'all for a pretty long time, but I mean, I'm glad y'all stayed. I hope you got some insight out of all this. I didn't mean to keep y'all waiting for fucking 10 years, but I go on my tangents. You'll realize that about me. Oh, the AI trading thing. Thank you, Giovanni. I appreciate it. I'll start doing more of these because I'm honestly like, I want all of this to be, including O1 and 3R, and everyone else will start joining up later because there's different time zones. So I'll have to figure out a call schedule. So there'll be about 20 of us next time. But what this is, or maybe even more because I don't know how this video will do, but what this is ask for input, share your ideas, and ask to see if, if this is this valid, is this wrong? Like that's the whole point of what this community is. No one in here will ask you for a single fucking dime at all. I will promise you that. And if they do, please tell me because I will fucking ban them. So there's that. No one wants your money in here. We all want everyone in here to succeed because it's a rarity among people these days. And if you're in here, you have enough of a work ethic to try and to succeed. So we're all here to help you do that. That's it. And and you have insight that I may not even know, and no one's humble enough to admit that these days. You might know something I don't, or you might know something Nate doesn't about AI trading, which he can talk about right now since 3.0. Let me spam Nate really fast. I'll get him to talk about AI trading. I gotta turn this off though. I think he's like back testing. Yeah, he's about to talk about it.
Sweet.
So
yeah, whenever I don't know what time to work. I don't know what time.
I don't know either at the moment.
But, I was at the gym this whole time, so couldn't really ask. I wasn't in front of my screen to ask questions really, but if we could do earlier, that'd be great with me. Not. I'm
probably gonna need to be 8. I did 8 because I was like, oh, I don't know how people's work schedule is. I just did 8, in general. But I'll probably do
it around 6:30 ish.
Yeah, I just got off and I seen the notification. I just hopped on real quick.
Yeah. Alrighty. Well, Nate's gonna come on here. Let me fucking. What is he doing right now? I gotta like spam his ass. Let me call him. He'll talk about what I think a lot of people in here are interested in listening about, which is really evolution, to be honest. I mean, it's kind of how it is. It's mostly evolution at this point. AI trading. He's going to talk a little bit about that. Yeah, the future, honestly, like you don't have to go through. All right, Nate, take it away.
Well, I'm here.
Take it away, Nate.
And I said something. I saw something about AI trading. I was like, hold up.
Oh, they want to know. Give them the rundown.
What?
You said that's my.
Yeah, it is his cue.
Yeah, pretty much.
Take it away.
We got what 3RO or bro? I'd assume it's called bro. I just got random stuff on my other screen. Give me 2 seconds here, boys. I'm open this up here.